Hello, everyone. Welcome to the webinar. I'll be starting in a few moments. Just give everyone a chance to get situated. Hope everybody's doing well. Hope some of you made some money this week. Whatever I kind of laid out there, it's kind of been happening. Gold's going down, New Zealand dollar, Canadian's going down, stock market's going down. So these are things that I have been shorting the whole week. So we'll talk about all of that in a moment. Let me know if you guys have been using any of these strategies. Let me know if you have had any results. So Eduardo said New Zealand dollar Canadian trade is in profit. So I'm going to put our strategy PDF for those of you who haven't seen it. I'm putting it back in the chat box here. And why don't we get cracking here? So there's still some people kind of filtering in, but I'll go ahead and get started. So welcome to the third and last session of our three-day webinar series. My name is Mark Shaw's the Pattern Trader. I've been talking all week on how I use price and price action to capitalize on monster moves in the markets. And that's exactly what we've had in the last couple of weeks. And that's exactly what I've done. I actually started buying put options. I started betting on a turn lower in the Dow Jones Industrials, which is one of the major US stock indexes, a month ago. I started buying these put options. They expire next month, October 21st. So kind of long term for me. But I started accumulating these put options at about $1.50 a month ago. And it's been a horrible month. I mean, I think I know where this thing's going, but it bounces around very violently every day. And, I've got a lot of money at stake here. I'm making over 300 grand in this position. I'm short some Moderna. Moderna was down about $4 today. I'm short the stock QDEL. It was down a little bit today. I was short the Qs. I bought these put options in the triple Qs at $1.35. And I closed out some today at around $2.30. And I've still got, pretty big position. These expire tomorrow. So this has to work, or $46,000 literally goes down the drain. So probably not the smartest thing to do. And the same with these Exxon put options. They expire tomorrow. So I've got about $70,000 that could literally blow up in my face tomorrow if we have an up day. So, it's no risk, no reward type thing. So, I've been short the Dow, I've been short the stock market. I've been short the New Zealand dollar, Canadian dollar, and I've been short gold. And gold plummeted today. Gold was down about 2%, down $40 or something, and made a few shekels in that. I've been saying yesterday, I think based on the charts, gold could go down $500 from where we are right now. So I just look at charts and chart patterns to look at setups. So, all this week, I've been telling you about my New Zealand dollar Canadian position. There was a signal yesterday. There's another signal today. So basically, I look at everything in stages. So try and look at what's happening on a chart pattern. Is this thing going up? Is it going down? So New Zealand dollar on the daily, the weekly, everything is going lower. So the first thing is, I try to identify what is the direction, what is the phase of the market. And this clearly is in a downtrend. And then within the downtrend, I try various ways to see levels, how I can join that trade. If there are patterns, if there are price actions. So buried within this down trend here is this head and shoulders. Looks just like a man or woman's left head, shoulder. This is the peak, and that's the right. So this is a bearish price pattern. Typically when prices crack the neckline, a neckline is simply a line drawn through the pattern. Once they crack there, it now indicates that this thing is ready to go to the downside. So if you didn't catch it then we just try and find various ways to catch it. And the way I do that is through what I call my insurance bars, either a key reversal where prices close in the opposite direction. So they go higher. By the end of the day, it looks like that. So I call that a key reversal where it went higher. And then by the end of the day, it closed on the low, indicating that the sellers are in control. So you can see sometimes you get these key reversals and they actually point in the direction they want to go. Now, don't look at these reversals in a vacuum. There was always a preceding formation pattern, what have you. You had this double top, you had this kind of descending triangle, but within that pattern, you had this key reversal. So I look at the trend, the pattern, and then whether it's a key reversal or what I call an inside bar. I don't really care where that inside bar. By definition, an inside bar is where the range of this session from high to low literally sits within the range of the prior session. And you can see you have a double key reversal in New Zealand Canadian. You can see both the ranges of the last 2 days that we've been speaking has been within the range of this bar 3 days ago. So when I look at these inside bars, I look at them as storing or coiling energy. Sorry, that was the wrong color. Where it's just building energy. And you can see now this has just been collecting down here. It's just kind of going back and forth, bouncing around. If you're driving yourself crazy and watching on an intraday 15-minute chart, it's going nowhere. But to me, it's just building. The more it kind of just is kind of hanging out here, eventually it's going to go in the direction as indicated by the trend and the pattern. So if you're not already in it, what I usually do is set up a strategy where basically I look the market to confirm what I'm looking at. So once I understand the direction, once I understand the pattern, then I look at for my key reversal bars, my inside bars. And so I've got all three components lined up. And then the fourth component is I just layer it with an execution where I said, okay, I'm going to put a sell stop right under today's low. So whatever today's low was, 78.80, I don't even know what it was. I just put a pending order underneath there and look for the market to confirm what I'm looking at. So tonight or whatever we open and we continue going higher, guess what? I'm not going to be put in here. But if it goes higher, opens now and for the next 3 hours and then 2 in the morning, it makes a new low, I'm sleeping, but the market's just putting me into a trade. And I look for the market to be effortless. I look for the market just to put me in the trades. I'm not looking for some magic Bollinger Band. I'm not watching the screen till my eyes bleed on some 15-minute chart till midnight. Basically, again, I just put a sell stop pending order and let the market do all the work for me. I would just put a stop loss behind this. And now I know where to get in the trade. I know what my risk is in the trade. So now I don't know where this is going to go. I don't know how far it's going to go. I don't know in what time frame it's going to go. But if I know where to get in and where my risk is, that really is the holy grail of trading. You can't know everything, but if you can understand your risk and your potential reward and where to get in, then that's the best you can do. And that's all I need to make just huge dollars in the market. I think this is a no-brainer. I think you can close your eyes and you could sit in this trade for 3 months and call me up in 3 months and say, Mark, thanks very much. I made 300 pips on this trade. So Tahir says, if it's on the low, wouldn't the buyers be in control? Well, sometimes you do get bottoms down here, you get double bottoms, but that's why you need to know the cards you're holding. That's also why you need a relatively larger time frame to assess. I mean, right now I could basically assess this is, I think we can all agree, in a downtrend. Now trends do end, markets do put on bottoms and they go the other way. But just on this chart, I don't see any sign of a bottom. And then certainly if I peel out, so this is a daily chart where each one of these bars is one 24-hour session, then I can peel out to the weekly chart and see the much bigger implications of the New Zealand dollar Canadian tell me that this is, this thing is over. This has done 8 years of work and it's broken. So there is no sign of bottom. Unless the market tells us that, unless it puts on some kind of pattern or price action. I didn't even give it enough days, but for the purpose of this, so if I look at the New Zealand dollar, Canadian dollar, it's been going sideways for a long, long time. I probably should have put up the monthly chart. And you can just see buried within all this is this double top. So to me, this is my cheat sheet. Every rally I sell into, because this is telling me that this market topped. So I use these patterns to put on trades where I'll do counter trend trades, but I'll know what I'm looking at by virtue of the pattern. So most people are trading on a 15-minute time frame, and this is all they see on their MetaTrader. Just that, so if you don't understand what you're looking at, if you don't understand what is really dominating this particular pair, then you're likely to get caught out on all of these trades. So buried within this, you also have another double top, head and shoulders here, broke through the neckline, and now you're breaking through all of 8 years worth of support. And there is like literally nothing in its way. There is nothing to stop this anymore from going lower. So there is, no sign of a bottom. Now, obviously if prices come here and it starts looking like this, then I would surrender and say, okay, maybe there's a bottom, but let's deal with that if and when it comes. Right now, there's no sign of a bottom, and I can't see how this just doesn't keep cratering. So that's the New Zealand dollar Canadian. Today, gold crashed 2%, $40, what have you. And I've been talking about gold all week and said that if it goes through this very vital area, there's going to be some serious problems. And exactly one day later, we see what I was talking about yesterday actually occurring in the marketplace. So, here are my trades. I sold some at 17.12 and it's now 16.63. And then I sold some yesterday at 16.94. So I added to my position, when I saw that it was closing right on the low yesterday on the daily chart. So when I look at gold on the monthly and the weekly, I see this big, bad looking pattern. And pattern equals trajectory. Just like a human being, markets can't run from their history, their past. So you can see that gold has been trading within this big, bad, ascending, broadening pattern. This is, I believe, what the stock markets are doing, where throughout this pattern, price has been going up. It starts out narrow and then widens or broadens at the top. That's why it gets its name, the ascending, broadening price pattern. Now, this is typically a reversal pattern. And it certainly looks like that's what it's doing. It's throwing this big, bad up move into reverse. And within this pattern, we saw this double top and head and shoulders. So there's all kinds of signs that were telling me that this thing was going to break to the downside. Now, it did have some support here. And I said, once it cracks here, there is kind of very little to stop it from doing that. So, that's what I expect, that we're just going to open up a huge swath lower in gold. So, path of least resistance now is lower. And, here's the same ascending broadening pattern that I shared with you on Tuesday when we first met. I said the S&P is in this ascending broadening thing, and it's likely to go lower. And all week, we've done nothing but go lower. And I listen to these guys behind me, these analysts all day long, torture themselves, analyzing charts. Analyzing, balance sheets and valuations and the Fed. And I don't listen to any of that. These guys, they sound like geniuses, but they're morons. And I don't think they have any clue what's in store. Most people are saying the June lows are holding, it's a buying opportunity. We're going to have a rally into the end of the year. I think we're at great risk of one of the worst market crashes in history. I've been saying that since November and making a lot of money shorting this market while everyone is kind of wondering what is going on. So to me, here is this ascending, broadening pattern. Looks just like the same thing we saw in gold, where it broke down, retested to the dollar, the breakout, fell out of here, retested to this, and now, it looks like we're going to come and make new lows, possibly by next week when the Fed announces interest rates. So tomorrow we have a University of Michigan consumer sentiment number at 10 o'clock Eastern time. And I think, you're just going to get a further whacking of this market. So in addition to this ascending broadening, which is bearish in and of itself, I see this double top, made one high, backed off, retested, and now we have this M top sitting astride here. So if a market is topped, how in the world is it going to bottom? Doesn't do that way. By definition, if a market's topped, it's got to go lower for months and possibly years. So the implications of this are very ominous. I've been saying since last September to our members, get your house in order, get into cash, get out of risk, because I think, wrath is coming. So, I don't want to kind of get into it, but, I put on this big position really as a vote for what I think has been the most derelict, incompetent economic policies and Fed practices I have seen in a lifetime. And to me, life is cause and effect. You do something stupid, you're going to break something. And I think something is going to be broken. And I think you're looking at something like this in the market. And these patterns are telling me there is some big, bad, malevolent thing out there. And, you have this key reversal. You can see this week we went higher. And, I'll look and see where we close tomorrow. But I'm going to assume we're going to close closer to the low than the high. And then you have this other key reversal right here. So these two things are pointing in the direction this wants to go. Now, trading is, not easy. There's levels that you got to get through. And whenever markets get to prior levels that they've rallied off of, you get a lot of herky-jerky, a lot of volatility. And I'm sure I'm going to get a lot of battery acid in my stomach watching this thing, go up and down, and my put options go up and down 50, 100 grand every hour. So I try not to watch them. I just try and have the discipline of believing what I'm looking at. I made a play based on what I'm looking at, and somehow the market will, take care of the rest. But it's going to be very, very violent in here, very violent. You'll see huge, Dow will be down 700, then up 500, and then down 2,000. I expect you'll see everything in the next, probably in the next month or so. I think, things are likely to come untethered. And so we're going down. Neelan says, do you take snapshots on Friday? So I do look at the weekly. So this is a weekly chart. So this won't close until tomorrow. And then based on how this closes, I'll make assessment on, on a weekly basis, but I also do things off the daily charts too. So basically what I try and do is take a global assessment of what is going on here. What are the cards I'm holding? You can see that, this thing has, been vicious. You had these violent up moves. But to me, everything's about context. I just look at these up moves as opportunities to sell into. So for 15 years now, we've been programmed to buy the dips, and every time you've been rewarded. So we have a whole generation of managers on Wall Street that have really never seen a bear market. If you're 35 years old and managing, $5 billion on Wall Street, you've never really seen a market that is about to come. They have no clue as to what's about to happen. And that makes that very dangerous too, because everyone is, we all get programmed, and this is how we've been programmed. And I hear it all day long, that this is a buying opportunity. It's a buying opportunity. It's not. This is not buy the dips anymore. It's sell the rips. So you're going to get these big moves, but it's sell the rips, not buy the dips. And bear market rallies are vicious. During the Depression, I think we had 8 rallies of over 15%, while the market eventually went down 80% along the way. So that's what happens. You go down and then it rips, go down, rips, go down. This was huge. Go down, and they put on these big 10 to 25%, rips. And it's jarring, but that's the nature of bear markets. So like I said, it's going to be very difficult in here. But that's why you have to just stick to the discipline and, wait for the rallies and sell into the rallies. So that is, my prevailing philosophy. I just look at patterns and price action, and then try and find areas where I can, put trades on where I've got a small amount of risk for a, huge amount of, upside. So I think every stock on the board, everything on the board is a sale. Tyrone says, when you see the rips, you keep selling into the rallies. Basically, I do that, Tyrone. So what I did in the Qs, for instance, this week is that just to simplify it, you can use these indexes or ETFs, right? So the triple Qs are is the ETF that approximates the NASDAQ. So you can see this is what I did this week, where on Monday, right here, when the Qs were 310, I bought the 305 puts. So that means that thing had to go down 500 points for me just to get in the money. And I bought them for around $2. Now each put's, worth 100 shares or whatever. So it's $200. So you can see on Tuesday, these things went to $293. And my puts went from $2 to $12. I made 600%. So this is why you don't have to win on every trade. I lose plenty, but just one of these trades, I can, take pot shots at 10 others. So what I do is once I make a huge amount of money is then I take money off the table and then roll up the trade. So what happened was this thing dumped. And so I took the 2 to 12. I got out of took my $12 and then waited for a rally. And then I bought the 290 puts when this thing was at 296. So when this thing rallied, I bought the 290s for $1.35. I paid for some yesterday, and about $1.75. So you can see I took $12 off the table and then reinvested $1.75 or $1.35. And so even if I lost all this, I would still be up, a huge amount. So this is what I do. I just, wait for pushes, take my money off the table, and then ladder lower. And so now the options that I bought yesterday at $1.35 closed at $2.30. So I'm up almost 100% on that. And again, they expire tomorrow. So I need to push into tomorrow in order to, make more money. So options they're risky, but they also limit your risk because you can only lose as much as you put up. So if you buy something for $1.35, again, that's based on 100 shares. So when it says it's the underlying, so you're basically investing $135 for a bet that, this could turn into 500 bucks or 1,000. So this is what I do. I do individual stocks, but if I see there's just a general thing in the indexes, that's what I'll do. So this is the daily on the Qs, and you can see again, here's your head and shoulders. You basically, broke out and rallied back to the neckline. And I thought this was just a BS rally. So I bought puts before the CPI announcement. I had no idea what it was going to say. I had no idea what was going to happen. But to me, this is a bear market. So I'm just selling into rallies. That's what I tell my members every day. If you give me a healthy rally from 290 to 315, whatever this was, I'm just going to sell into that. I have no respect for these rallies. I think this market is going to go into the toilet. So with options, Akash, it's a little bit different than stocks. With options, basically, I just, bought these things and spent $2. And if the thing kept going higher, I would have lost my $2. But the $2 went to 12. So that's the good and the bad thing about options. You can lose all of your money, but at least it controls your risk to $2. Whereas if you short a stock, you're exposed to unlimited risk. So, I very often short stocks. I'm short a couple stocks right now. So again, it all comes down, doesn't matter what you do, what I look at, I'm looking at this. This is another ETF. An ETF is just like a mutual fund. It's a way just, that you get a basket of everything. But, to me, there are certain things out there that are looking very, very ominous. So this is the real estate ETF, the IYR. IYR. Now, whether you're looking at it as an opportunity or not, to me, it's just another harbinger of toxic market conditions that are about to come. So again, I look at everything the same. The IYR, corn, gas, the euro yen. Is it trending, or is it turning into a new trend? And so this wasn't an uptrend, and then it put a bear price pattern, made a top, re-hit that top, came through the neckline. And now once it comes through the neckline, now that thing is effectively confirmed. So again, this is my reference. This is my cheat sheet. So if we start rallying next week, I'm not going to be, sucked into that. I'm going to be shorting that, because this is telling me that it's over. This is game over. If something is topped, it's not just going to bottom. Markets are a process. They have to go down and then do something, and then maybe it'll be a bottom down there. And I wouldn't be surprised to see it look something like this. But in the meantime, in addition to the top now, so once I see that something has put in a top, that I can recognize what the market condition is, then I look for just signals, price action, that tells me, where to join this thing. So you had a key reversal here, made a new high, close on the low. So now, you know where to get in. Basically, you just sell it right here, put your stop loss there, and go for the ride. So now you have another key reversal this week, made a new high. It appears you're going to close on the low, much lower. It's what I call actually an outside key reversal, where you take out both the high and low of the previous week. So this is looking like that is in the future. So Nilesh says, how long do you stay in for? I don't know, but you can sit in here for a while. This is not going to end quickly or painlessly. And I suspect we're going to go back to these lows. Look, I am not going to, sugarcoat it. I think we're going into one of the biggest market crashes we've ever seen in our lifetime. I started saying this in August of last year, and there's nothing, that's convincing me otherwise in these markets. I think you can use your imagination and picture how much this is going to crash. And this market will probably exceed that. So it's kind of dangerous to have these emotions and feelings. And I have to kind of, holster myself all the time. But I have absolute contempt for our politicians, the central bank. They put us up against the wall. Federal Reserve is a cabal of 9 people that go into a room. Nobody would recognize any of those 9 people if they ran into them at Starbucks, and yet they're running the biggest casino in the world, the U.S. economy, and they've treated it like a casino, and we're going to see the repercussions. How do you deal with losses? We can't get everything right. So that's the key, Bill, is that I don't try and get everything right. There's different strategies you can have. So my idea is to always try and carve out the bigger moves in the market, get 600% on a play. Now that's very extraordinary. That's an option, but I'm always looking for the setup that's going to, give me a 3-day, 3-week, 3-month push where I can take a bigger piece out of the market. You can see I'm making whatever, 250 in these commodity plays, gold and the New Zealand Canadian, and I'm not looking to take these profits. I'm not going to stop it from making me more money. Now, at some point, gold's come down pretty quickly. I should probably take some off the table. But New Zealand dollar Canadian, I'm just going to leave it. So I'm always looking for the bigger moves. And along the way, I'm always probing and taking hits and taking whatever. And, this is a strategy where you can have 5 out of 6 losses and still be a huge winner. So, there's many ways of skinning the cat, right? You can be a day trader, trade on a 5-minute chart, look to make 10 trades a day, and take very small losses and very small gains. And it's very unlikely you're going to be successful doing that. To me, I try and, look at strategies that are going to give me larger profits. And along the way, if I have to probe around, take a few losses along the way, it's just part of the psychology. So you kind of have to figure out what works for you. I used to trade on the 5-minute chart. I can see double tops on any different time frame. The problem is it just invites you to overtrade. So what I like to do is step back and look at the big picture, see what's happening. So this is a weekly chart of the IYR. This gives me a picture of what's happening in the real estate market. If I'm looking at a 5-minute chart, I'm going to, I can't see the forest for the trees. So once I kind of understand what the big deal is here, then I can start drilling down. I can look at a daily, I can maybe look at a 4-hour and start, assessing risk reward trades. But in the main, this thing is going to go down huge. So it doesn't matter, where you get in, and don't look at it, because this thing is going down much further. So, I have different outlooks and different time frames. When I shorted the Dow Jones, I'm in these put options. Now, put options are grenades. This thing goes up and down on me like, 20% an hour. And so I made this play in late August. Where's this thing? I started buying these things August 16th, August 16th, August 15th, August 12th. And we're September 15th. So I'm over a month just sitting in these DIA options. And I shorted this right against the high. So this is the DIA. This is the ETF that tracks the Dow Jones Industrials. And again, I'm just sitting this premised on an observation of a pattern, a controlling pattern. Frankly, I think there are 2. One is this kind of V shape, looks like a roof. So it's kind of a V top, if you will. It has the word top in it. And the other is this kind of diamond shape. So when this started bumping up against this diamond, I started shorting it. And I thought, well, I got it right by the thing, and it started going down. I go, I got it exactly. Then it kept going up and up and up. And I actually just started buying more and more puts. I just said, I'm going to be right on this thing. And I got obstinate, but it was very hard to do when the market's going straight up and you're betting into a down move. And then you can see it turned, made this huge key reversal, and now I think it's over. But the question now with options is you're in a race against time. This is going to go lower, but is it going to go lower in the time frame that I need it to go? And so it's a game of chicken, and it's not for the faint of heart. I mean, I'm dying every day here. I've got a lot of money at stake, $1 million or so, and it could just evaporate on me like that. And I would not like to kiss that goodbye. But I just think that this thing is got a lot more to go, and it just takes a lot of stones to see it out. But this is, again, I'm just basing this on a pattern. Every day I hear these money managers say this is a great buying opportunity, it's on sale, on, and I got to listen to this, and then the market's rallying, and that's where it's very, very difficult. That's why you've got to be completely objective, understand what you're looking at, and let the market do its thing. Eduardo said your strategy is great. I've been in pound New Zealand for 2 weeks at 189, and now it's at 192. So good on you, Eduardo. I had a feeling pound New Zealand was headed higher. I've made my bet in this Dow Jones thing, and that's kind of where I'm concentrating my risk right now. But I think pound New Zealand is going to head higher. But good on you. So we're in this kind of jaws of death pattern. So it looks like the jaws of a shark, this thing. So this is going to eat the longs alive. Jean-Louis says, how precise has a trend or pattern for you to accept it? I don't really know what you mean by that, but look, I will get in. I usually get in very early. That's kind of the, people say you can't pick bottoms or tops. I do it all the time. I don't mean to sound arrogant, but I do it through a combination of just observing the price and the price action. So what I try and do is I try and catch something as it's coming out of the chute. So to me, it's a combination. So this is a market. This is the Dow Jones. This is a little bit more difficult, probably. That has went straight up, right? So very hard to call a top. Every time you called a top, you were wrong. But right in here, this thing started to make a topping pattern, a head and shoulders. Left shoulder, peak is the head. And so very subtle. I mean, it's buried in all of this crap. And if you don't really know what you're looking at, sometimes it's hard to see. But this is the pattern. So this is all BS. That is the pattern. So, I saw that thing happening early. And then once I start to think, okay, here's a top and here's another top, and you're wondering, well, is this really a top? What confirms it for me is the price action so you can see this made it at the all-time high. When this Dow Jones made an all-time high, at the end of the week, it closed on the low, and the sellers were in control. So this is a week where you heard the newspaper, Dow Jones makes new highs this week, and you're looking at your portfolio and think, okay, good, we're good to go. Well, it was over right then. And so I will look at this and start getting short up there. I'll start saying, okay, this is the pattern. I mean, I've done this long enough where I can start seeing these things in my sleep. And then I just look for some kind of confirmation in terms of price. And price tells you, price actually points where it wants to go. You can see following all of these reversals was a big bad sell-off. So now we've got, a big reversal here. And, I can imagine we're going to get one of these. So, but buried in this pattern up here, this head and shoulders, was this reversal right here. So what I'll see is a reversal layer or a reversal layer, and I will short these. A reversal here, I will short these. A reversal here, I will short these. Now, again, you just can't look at the reversals, in a context, or in a vacuum. There was a pattern that indicated that this was game over right in here. From November through March, this was topping. And then you get the misdirect. I always say the market's like a magician. A magician doesn't just, show up on stage and pull a rabbit out of the hat. He's always kind of doing some misdirect with his right hand while he's pulling the rabbit out with his left hand. And this is the misdirect, and that's the reality. So, you kind of need to know the cards you're holding. And this is the problem with trading on a 15-minute chart, where this is, the only price action you see. And on this thing, it looks like it's going up, down, sideways. You can't really tell. But if you understand what the game is, then you can play it accordingly. So just like anything else, like if you're at the poker table and you don't know who the sucker is you. And it's, if you're trading on a 15-minute chart and you're trying to trade all these squiggles without really knowing what is controlling those squiggles, eventually you'll get taken out. So what I try and do is see the big picture and then load up the boat, which I did right here at 34,000. This is where I was buying my puts a month ago, right there. So why was I buying into this strength? It looked ludicrous at the time. This thing was straight up 6 weeks in a row. And by the way, that's how you know it's a short covering rally, when it's all blue. They just never let you breathe. They'll just step on your throat until they take the life out of you. And then you get out, and then it collapses. So to me, it's pattern, price action, execution, and then rinse and repeat. Stella says, when trading, do you set a break even, or do you just allow the trade to play out? So again, I just look at the patterns and try and trust. So sometimes, like New Zealand dollar Canadian, I don't have a stop in it. I don't have a stop or a take profit in any of these positions. So, now if I'm just probing around like day to day, just trying out stuff, seeing if it fits, I'll put a stop. But if I kind of feel like I got the tiger by the tail, I know what's going on, I know this thing can't go up on me now, I'll just let it work for me. So, if you put in, get in your trade here, and then you put your stop loss, some arbitrary thing, and it goes down and hits you and then goes down, that's what most people are doing. They're putting a stop loss in some arbitrary area. And to my mind, this thing could swing here, before it goes. This is going to be very violent. Even today, it was, Dow went up down 150, then it was up on the day, then it went down 200. So if you're trying to put, your stops all in the middle of this thing, you're just going to get stopped out. I just make one trade a month ago and let this thing work for me. So Tyron says it's all about trust. So you trust the pattern or the trend, basically, yeah. Now look, the problem is, you had this pattern here. It gets going, then it puts on another pattern, and then it goes, up your bum that way. So, it's about timing this thing. It's about syncing it. It's about, there's a lot of things that go on. It's obviously not that easy. If it were, everybody would be, making a lot of money. So I kind of look for, like I said at the outset, I capitalize on the huge moves, but I also know where the traps are. So in this case, the market came down and put on a pattern in the form of this double bottom. And it also had this key reversal right here. where it made a new low and closed at the high. So yes, I'm bearish, but I knew that there was a high potential of something like this out of there. So I actually went long, even though I know that the big trend is lower. So, trading is, figuring out which, is the governing pattern, but then along the way, the markets throw you all other kinds of patterns, and you got to figure out which ones are real and which ones aren't. And I've been trading decades now, and a bit of it is instinct, but, I look at, a combination of price action, price patterns, levels. Sometimes what happens is the markets break out of a level. So they break out of the neckline. You think, okay, now I got it. It's broken out. And then it comes back and does a retest. I mean, I told our members to the dollar exactly what was going to happen in gold, because I actually shorted it at 1,800 a couple of weeks ago at 1,800. And then I said it's going to go down to that 1670 level, and then it's going to retest the breakout area. So there's a certain cadence. It all seems like, well, it's all predicated on the Fed and information. There's just a cadence and there's a rhythm, the way these markets trade within patterns. They form patterns, they break out, they typically do a retest. So this is exactly what happened. You had this ascending broadening thing. And I said to our members, short it here and put your take profit at 1707 or something. I had a feeling it would go a little lower, but so we took out $94 on that move. And then I said, it's going to go back and retest this breakout area. And that's exactly what it did. But now it's made a new low after the retest. So now this signifies that it's game on. This is real. This is real. So any rally, short into that. And, that's how I play the game. I don't care what the instrument is. Euro, yen, gold, crude, IYR, it's all the same. Bill says, when are patterns invalidated, in your opinion, and to use a stop loss? That is a very good question, Bill. Obviously, there's a lot of nuance to trading, and it's very hard for me to explain all of that. And that is an excellent question, because you will see patterns, in textbooks, and it goes obviously in a textbook pattern. You see a double top and then it just goes. But, the markets lay traps and they look like they're patterns. I'm trying to see if there was something here. So sometimes you'll see something where, you could say, okay, here's a double top, but it never kind of went through the neckline. You can see sometimes the market will put on a top here, it'll go down and then go, well, how did that happen? That was supposed to be a double top, but you can see it never went through and confirmed that. So, very often the markets will lay these traps where it'll look like a top, it'll come a little bit to the low, and then it'll, And so to me, what I do is I put my boundaries and structures. So this was a neutral pattern. So this could have come down here and bounced off here and gone and made new highs. So right around here, to me, this looked like a pattern within the pattern. So I didn't think it was going to do that. But there was a chance that every time it came here, it did bounce off. Every time it came here, it had a bounce. So now all I do is I draw my patterns, I draw the lines, and then I see how does the market respond to what I'm looking at. Did it stop here and go that way? Or, is it going that way? So now the market has shown me what it's going to do. So now I understand this is a reversal pattern, and we're going to come all the way back down here. So the markets will lay traps where it will look like something. One of my favorite patterns is a descending triangle, where market kind of gets in here and then it just starts going in a descending fashion, back and forth and back and forth and back and forth. And then when it comes out here, it then gives you a signal that it's a reversal pattern. But the market is very sly. You know, it'll get going, it'll hit the lows, and then all of a sudden it doesn't hit the lows and it starts coming out that way. And this is where it's a neutral pattern, where it's actually going to go that way. So you can see it never came down and touched the bottom end and then snuck out. This is what the dollar yen did. So I was shorting dollar yen for 5 years. Every time it made a new high, I would just short it. And then it started breaking cadence. And I was telling our members that this is it. This is a once in a decade move, and this is going to break out. Let me just see. And this was a trap. I don't even know if I can get it on this. Yeah. Okay. So this was the trap. This was the dollar yen. And for 5 years, between 2015 and 2020, I made so much money shorting this descending triangle. You can see it was in this descending triangle. It had this double top here. It had a head and shoulders. So this was my governing thing. And every time this thing rallied, I shorted into and just had a party. And you can see that it had this cadence of making these lower highs. But all of a sudden, and I thought it was going to roll here. And I thought we were going this way. And this is the thing. I draw my structures, I put my boundaries around, and then I observe, prices are sneaking out of this thing. And I was telling our members right here, this is a huge once in a lifetime, once a decade trade. And that was, 117, and now it's at 145. And it doesn't look like this thing is going to stop till 150. But this is an example of how you see these patterns. Here was the, the head and shoulders here, the double top. And so this should have actually gone that way. So what I do is I look at the pattern and then I look and see, how does the market respond to the pattern? Does it do what it's supposed to do? And if it's not going to do that one thing, it's going to do the other. So I will simply get on the other side of something, if it doesn't do what I think it's going to do. So there's a lot of nuance to trading. There's a lot of ways to interpret these patterns. But again, it's all based on the structure of the market and not about listening to noise and economic theory and anything else. This is the dollar yen. Sorry, I had a little thing here. It's the dollar yen. But it doesn't matter. Again, for the purposes of this thing, I was just trying to illustrate how markets move within these patterns. And sometimes this could have been a big reversal pattern, which I thought it was setting up to be. And it broke out here and then went the other way. And in fact, I don't know where I said it, somewhere down here. I caught that pretty early. Where was it? This is March 13th. You can see it was breaking out here. And I was showing the breakout right here. I said it broke out right there. And then it put in a little consolidation. And then it was breaking out again. And this was March 13th. I said buy to 117. And now we're 4,000 pips higher. So the market tells you where it wants to go through a combination of patterns and price action. You don't have to be a special genius. So Armo, I think I've been talking about that for 3 days. Armo says, how do you recognize the real point to enter the trades? The patterns tell you. The pattern tells you, and then the price action, and then you layer it with an execution. So, you see the top, it comes down, you see a key reversal, you put your sell stop, underneath this reversal, you put your stop loss there and you go for the ride. So it's obviously not that simple, but it really is. So I'm going to kind of end it there. I hope you like what you saw. I really appreciate if you would tell me or give me some feedback. We have a review website. If you're interested in what we're doing and want to learn more, don't take it from me. We have 310 reviews, and you can read what other people said. This, I guess, I don't really look at these a lot. Alex said, I've been following Mark for under 4 months, learn more in 4 months than the last 2 years of trading. My mindset is completely different now. So, it looks like I write all these things. So this is through Trustpilot. It's completely uncensored. We can't control this. That's why it's called Trustpilot. It's third-party verified. Talked about it, the book. So you can go and read. Natalia is a great member of ours. Says the Freedom Trader is simply the book, converts knowledge into pure success. So you can read what other people, but I really appreciate if you guys would go ahead and tell me what you thought of the last couple of days. If you got anything out of it, if I could explain things better, I would really appreciate feedback. So I'm going to put the review link in the website, and just click this link, and I would really, really appreciate. I know everybody asks you for reviews, but I've given 3 days of my time, and it would really like to know how you received this information. Frank says, thank you for these 3 days, the best I've seen. So Frank, that's phenomenal. Just cut and paste that and put that in the review, and I'd be happy about it. Thanks, Mark, for doing what you do. Thank you. Mike says, I've made money in the last 3 days from a different mindset. So Mike, I would really appreciate you posting that. Nilesh, you are welcome as always. So yeah, if you like what you see, we do a lot of things at the Pattern Trader. I'm not here to sell you anything. I'm sure after this few sessions, you'll get an email from our team, and there's a number of things. So depending on what you want, we have a community where we just started it. It's about 200 members in there where people post trades. I post every day. And, it's a great place to hang out. I do a morning session every day where I look at the markets before the markets open, and we put trades on, even before the real live session starts. Most people aren't aware. You can trade in the pre and the post session. So you can see the markets are actually trading right now. These markets, they're trading right now. So the markets trade before the live session and after. And I just analyze this in the morning before the market even opens. So Carl says the last 3 days were excellent. I would love to keep going with this. I'm currently looking for a correct broker in Ireland. So wish you well with that. Interactive Brokers is an international broker. I don't really recommend anybody. I don't have any affiliations. I don't endorse anybody. They don't endorse me. So just be Derek, you're welcome. I don't really recommend brokers. You just have to do your own due diligence and just make sure it's somebody that's regulated and reputable. Do your homework. Thanks, Eduardo. So Raymond says, I've already left a review. So thank you. ECN Broker, you could try ATC Brokers. They're out of the UK. And I actually, well, I shouldn't say anymore. So are there any questions or anything before we leave? I'm happy to kind of stick around and answer any questions you have. But again, it's really simple. We complicate everything. I always feel like I should be able to explain whatever I want to do to a 6-year-old. If it's too complicated, for a 6-year-old, then it's just too complicated. A trade should just stand out to you. When I look at this trade in the queues right now, my broker platform, I immediately, and that's what I do. I go through dozens of charts, and I don't spend any time. It should just jump out at you and say, this is the story. This is what's happening. So this is the queues. This is the ETF that tracks the NASDAQ on my broker platform. And immediately, I see all the patterns. Here's a very negative head and shoulders pattern. Then you broke out, just like gold. You broke out, you retested the breakout, and now you've made a new low underneath the breakout. So that signifies that it's game on. And this is probably going to continue lower. And then we had a reversal today. So into tomorrow, we're going to have some kind of news event on the in the early morning. An hour into the market, you'll get the University of Michigan consumer sentiment. And, if it rallies, just short into it. Frank says, I've been trading for 35 years and made it, but lost more. I really believe I've learned more from you than anyone else. So Frank, that is, look, when I started the pattern trader, I didn't know what I was getting into and whatever. And really, it's that kind of validation and the karma of feeling like I help people really is much more impactful on me than just trading. I've made a lot of money already. I don't need to do this, but I really, I feel by giving back, it's great karma. And so I really appreciate it, Frank. That's a great comment and I appreciate it. So Kayuta says, you're indeed the greatest mentor of all time. I always appreciate your life-changing webinars. So thank you. Appreciate that. Tim says, I missed these webinars. If you did, just message our support team. I'm sure they'll get you a copy. Just message our support team at support@thepatterntrader.com. I think I wrote that correct. So Douglas, thank you for your review. I appreciate it. Mark, thanks very much. I'll take that in a good way. Will there be a 60-day payment plan option? I think we're working on that Tahir. We're working on, certain things to, make it amenable. So hopefully price should not be an objective. If you want to learn, I really believe that, I am a good destination because, look, I'm doing this in real time. This is not theory for me. This is not something that I'm reading out of a textbook. I'm trading every day. And so I learn every day. I learn what works. I learn what doesn't work. And that's the thing. We learn more from, our mistakes than our successes. And so I'm doing this every day. I've got real money, on the line in these trades. So, I didn't invent the rainy day, but I believe I've got the best umbrella. So if you really want to accentuate or accelerate your trading education, I really believe we can help you. Thank you, Javier. I appreciate it. So Ellie says, how can I watch you trade live? You just did. So the markets aren't trading, but I'm, trading on live charts. So for the last 3 days, that's what I've been showing you, how I've actually made all of these trades in front of you on live charts. So, people call me all kinds of names and a scammer, and yet I'm doing things in real time. So it's always interesting. We started talking on Tuesday. I started talking about New Zealand. It's just gone straight where I said gold, the stock market. So, interesting to say how, you can mislead people when you're commenting on live market conditions and they're happening as I'm saying them. Jason, you're welcome. All right, everybody, thanks a ton. Dwight, thank you for your time. And hopefully I'll see you all somewhere along our respective trading journey. I'll be around. If I can do anything to help, just let me know. Thanks, everybody. Thanks, Dwight. So Tahir says, can I see lessons? Can I see sessions where you are actually conducting trades? So that's what I do in the boiler room. This is a webinar that we do. We do early in the morning, and I do trades while the market is actually moving in the market. So if you want to join the boiler room or any of our activities, yes, you can watch me live trade live. Frank, I don't know if we knew each other in high school. I don't know where'd you go? I went to school in Sarasota, Florida. So I don't know, maybe. So just a lot of people saying, how can I join the boiler room? Just send a message to our support team. I put the link in there, and they'll tell you. I don't even know. I just do this. I have a whole team to kind of do the admin. I don't sell anything. So if you have any questions, just message our support team and they'll help you out. Thanks, Andrew. Appreciate it. Thanks, everyone. We'll see you again soon. Thanks, Dwight.
All right, Mark.
Thanks,
Bye.
buddy.